My name is Arira Joseph. I am the founder of Blue Bulls Academy. Our job at Blue Bulls Academy is to provide financial empowerment, financial education also. Currently, we are giving a free $100 to all our subscribers. Those that will subscribe to our YouTube channel, they will get $100. So you check the Forex tutorial playlist. One of the videos gives a step-by-step guide on how you can get the free $100 to either trade forex, mainly to trade forex. So the $100 free $100 we are giving to trade forex has its terms and condition. The first is that no matter the profit you make, you can only withdraw $100. The second is that before you withdraw the $100, you must trade 30 lots. And now the third is Blue Bulls Academy is partnering with a company to provide this $100. So the company might decide that even after you've met their requirements, they will not give you the $100 that you've traded for withdrawal. So we want to remove ourselves for indemnification. So, but if you're interested and you want to test your trading strategy with this free $100, you check my YouTube channel, check the Forex playlist, look for the video that say how to make money without money. You're going to get a free $100 for trading. So over to today's class, I want to show you how or what you're to look out for before you buy the shares of any company. We're going to do real practicals. I'll take it step by step, give you a step-by-step guide on the things you're to look out for before you buy the shares of any company. So before you buy the shares of any company, first thing you must look out for is the company's revenue. And the revenue of the company you want to buy their shares must be growing consistently for the past 5 years. So let's say we want to buy Lafarge Cement. We're going to check the revenue of Lafarge to see that Lafarge revenue is growing or has grown consistently for the past 5 years. The next thing you check in Lafarge is their profit, or call it net income. The net income of Lafarge must be growing consistently also for the past 5 years. So apart from their revenue, the second thing you have to look out for before you buy the shares of Lafarge is that their net income must be growing consistently for the past 5 years. The third thing you have to look out for before you buy the shares of any company is the company's cash flow from operating activities. Please let me increase the brightness of my screen so that, okay, I think this is better. Okay, better, good. So the cash flow from operating activities for the company you want to buy their shares must also be growing consistently for the past 5 years. So our example company today is Lafarge. So Lafarge cash flow from operating activities must be growing consistently for the past 5 years. So the next thing you have to look out for before you buy the shares of any company is the company's economic moat. Let me reduce the screen, it's too bright. Okay. Economic moat. The economic moat of the company you want to buy their shares has to be strong. Another name for economic moat is what I call sustainable economic advantage. So the company you want to buy their shares must have a strong economic moat. So how do we find economic moat? Before we even talk about finding economic moat, what is economic moat? Economic moat is what the company has now that is making them relevant now and will make them relevant in the future. So I'll take that again. Economic moat is what the company has now. What does Lafarge have now that is making them relevant now, also make them relevant in the future? So how can we determine the economic moat of Lafarge? Taking Lafarge as our example company. So the first thing we have to do is to identify the industry of Lafarge. When we identify the industry of Lafarge, we are going to identify other companies in the Lafarge industry that are also Lafarge industry. When we do so, we are going to look for the revenue for the past 5 years, the profit for the past 5 years, the cash flow from operating activities for the past 5 years, the number of customers that Lafarge have, and we're going to repeat also this for those companies that are in the same industry with Lafarge. The company that has the greatest number is the king of that particular industry. So after we identify the king of that particular industry, we are going to check whether that king will still be the king in the next 10 to 15 years, 10 to 20 years. So if we check and we discover another company is the king of that particular industry, it means their revenue has been growing consistently for the past 5 years, profit growing consistently for the past 5 years, cash flow for operating activities growing consistently for the past 5 years, their number of customers is greater than that of Lafarge. That means that company that is in the industry of Lafarge is the king of that industry. So we're going to check whether that company also has any technological innovation that they're working on. If they have, means they're going to be king of the industry in the future, 10 to 15 years. So the next thing we look out for before we buy the shares of any company is the company's current ratio. Now, current ratio stands for current assets divided by current liabilities. It helps investors to know whether a company will be able to pay their short-term debt. So if the current ratio is less than 1, it means the company will not be able to pay their short-term debt. If the value is equals to 1 or greater than 1, it means this company you want to buy their shares will be able to pay their short-term debt. So we can go ahead and buy their shares. The next thing you have to look out for buy the shares of any company is the company's current returns on equity. Now, returns on equity is net income divided by shareholders' equity times 100 by 1. Our benchmark is that the returns on equity for any company you want to buy their shares should not be less than 10%. So the next thing you look out for, and the most important thing you look out for before you buy the shares of any company, is the company's intrinsic value. Intrinsic value, or the real share price of the company. You know, for Lafarge, when you check their price in the stocks market, Lafarge has two share price. The one that is seen in the market and the one that is gotten from calculation. So we do our calculation to know whether what is in the market, the price in the market, whether it is costly or cheap. So intrinsic value calculation is what separates intelligent investors for the normal investors. We that are intelligent investors, we want to know whether the current share price of the company want to buy their shares is the real share price. Whether it is cheap, whether it is the right time, or we should wait. So why do we have to check the intrinsic value of a company? The reason you have to check the intrinsic value of a company is because a good company can be a bad investment if you're buying the company shares at the wrong time. So the intelligent equation you have to ask here is, what is a good company? When is the right time? A good company is a company that has had consistent growing revenue for the past 5 years, consistent growing profit for the past 5 years, consistent growing cash flow from operating activities for the past 5 years, a strong economic moat, the returns on equity is not less than 10%, the current ratio is not less than 1. So these are the qualities of a good company. So when you find a good company, the next intelligent question you are to ask is, when is the right time to buy the shares of a company? So the right time to buy the shares of a company is when it is undervalued. And you cannot know whether a company is undervalued if you have not known the intrinsic value of this company. So we use an intrinsic value calculator to calculate the intrinsic value of a share of a stock of a company. So our premium students have our intrinsic value calculator they use to calculate the real share price of a company. So when you calculate the shares, the real share price of a company, the intrinsic value of a company, and the intrinsic value is greater than what is quoted in the stocks market, it means this company is undervalued. It's time to buy. But if the intrinsic value is less than what is quoted in the stocks market, it means this company is overvalued. Avoid them or wait. So let's head over to practicals. I want to show you how you find the revenue, the profits, the cash flow for operating activities, the current ratio, the returns on equity, and also intrinsic value. If you're with me, let's head over to that section. Okay, I'm going to open my browser now. And the web application I'm going to use is investing.com. Let me type it here. Okay, it has come up. Okay, it's loading. Okay, it's loading. It's loading. So to the top right, of this application, it said I should download this app. I'm not downloading anything. I like using the web interface, investing.com on my browser. Let me go back. Okay. So let me click on the search and type Lafarge. La. Okay. Lafarge Africa PLC stock Lagos WAPCO. Let me click on it. Okay. Lafarge information has come out. I'm going to click on financials. WAPCO financials. I'm scrolling down looking for revenue and other stuff. This is total revenue of Lafarge. Okay. So we're going to start from the year 2020 to 2024. So for Lafarge, for 2020, their revenue was 230,572. So now these numbers, you multiply them by 1 million. Let me show you where I got that from. Let me scroll down. In millions of NGN, Nigerian Naira. So you multiply on all the numbers by 1 million. So let's go back up. So for 2020, Lafarge revenue was 230 billion 572 million naira. For 2020, it was 230 billion 572 million. 2021, it was 293 billion. 2022 was 373 billion. 2023 was 405 billion. 2024 was 696 billion. Now you can see how it is incremental, consistently increasing for the past 5 years. So Lafarge has met our first criteria of a good company, that the revenue must be growing consistently for the past 5 years. So the next thing we're going to look for is profit, net income, not gross profit. Gross profit is profit before tax. Net income is profit after tax. So net income for Lafarge for 2020 was 30.8 billion. 2021, 51 billion. 2022, 53 billion. It dropped to 51 billion. then it rose to 100 billion. So Lafarge has had consistent growing net income in 4 years, 4 years in 5 year period. So that's fairly good. The next thing you want to look out for is Lafarge cash flow from operating activities. So we're going to scroll down again. This is cash flow from operating activities. Some people call it cash flow from operation. I call it cash flow from operating activities. So for Lafarge, 2020, they had 63.7 billion. 2022 was 72.6 billion. 2023 was 100.7 billion. 2022 was 100.7 billion. 2023 was 150.8 billion. 2024 was 212 billion. So their cash flow for operating activities is too sweet, too lovely, consistently growing for the past 5 years. So let's check their returns on equity and current ratio. Let's see how it goes. So I'm scrolling up, I'm going up. Under financials, I'm going to click this place that say ratios. Let me check whether my video is still recording. Okay, yeah, it's still recording. Okay. WAPCO ratios. So we are checking Lafarge Africa PLC. Their name is called WAPCO. So let's scroll down and look for the ratios, current ratio and returns on equity. So under management effectiveness, you'll see returns on equity. To the right, the first number is 41.22%. So that's the returns on equity for Lafarge. And remember, I told you that for our standard is it should not be less than 10%. So Lafarge has met this standard again, this criteria, 41.22%. The next thing you want to look out for is their current ratio. Can they pay their short-term debt? So we are looking for it. Okay, this is current ratio. MRQ stands for most recent quarter, that is in the past 3 months. So their current ratio is 1.04. And I told you that current ratio is current asset divided by current liabilities. It tells investors whether a company will be able to pay their short-term debt. If the value is less than 1, it means the company will not be able to pay their short-term debt. But if the value is equals to 1 or greater than 1, it means the company will be able to pay their short-term debt. So for Lafarge, their value is 1.04. Greater than 1 means they'll be able to pay their short-term debt. So Lafarge is a very good company. So now that we have found a good company, the next thing we want to look out for is whether Lafarge is selling at the right price. This 133 naira you are seeing there, whether it's the right price. Look at Lafarge. This is Lafarge share price, 133 naira. So how do we do that? I remember I told you about our intrinsic value calculator. So let me go back and look for our calculator. This is our calculator. Let it open. It's loading. Okay, let's put name of company. Name of company. What's happening? Please allow me, let me refresh this page again. Our calculator is having a little challenge. Let me pause the video and see what's happening. Okay, let's look for the outstanding shares of Lafarge. We'll go to our calculator and under general, you click on ownership, you scroll down. The outstanding shares of Lafarge is 16.11 billion. So go back to our calculator and input 6110, then 6 zeros, 1 2 3 4 5 6. Okay, the next thing we'll put is the share price of Lafarge. Lafarge share price is, I think, 133 naira. 133. Let's check. I think 133 naira, if I'm not mistaken. Yeah, 133 naira. So we'll go back to our calculator. 133 naira. So we're going to click on calculate. The intrinsic value Lafarge Africa PLC of Lafarge Africa PLC is $264.285. The reason why it's in dollars is because this calculator was built using dollars. It is actually 264 naira and it is 49.67% undervalued. So Lafarge is not just only a good company. Lafarge is an undervalued company. That means it is the right time to buy Lafarge shares. So you found a good company, you found a company at the right time. Today is October 16. A great company like Lafarge is selling for a 49% discount. So that will be all for today's series. My name is Abera Joseph. I am the founder of Bluehost Academy. As usual, take charge.